supply and demand is not as hard as you might think it is. Let's get into it. Hey you guys, what is going on? Shaquan here, and I am here to teach you guys a supply and demand strategy. It's my TMP strategy, but I'm going to give it a different spin here. I'm going to teach you guys how I teach people how to enter trades based on one candlestick. Yes, you heard it, one candlestick. And you've probably seen me do this so many times when I talk about it, but maybe you didn't put the concept together. So let's go ahead and get into this video. Now we're on Euro USD on the 24-hour time frame. And I love the 24-hour time frame because I feel like you can breathe. If you're any type of trader, whether it's a day trader, intraday trader, depending on your trading style, the daily time frame could be really good for you because it allows you to breathe through every single trade. You don't have to be here every single day to try to figure out what the market is doing. You get to take your time. So let's talk about what happened recently in October, because this could help you moving forward with this currency pair. So let's go ahead and let's go to the beginning of October when price had just made a new lower low. And this was literally October 2nd, okay? On October 2nd, price closed, as you can see, like a spinning bottom. So what happened was price ended up making a new higher high. Now, let's sit here and just talk about supply and demand for a really quick second. Like, you may hear people say supply is for the sellers and demand is for the buyers. But what does that actually mean? Here's what this means in the forex market. When you talk about supply, you're talking about the currencies, what is being bought, what being sold. In this example, EU or Europe, they are selling their euro to the United States, right? So technically right now, they're the sellers, okay? That's supply, the euro. The people who are buying the euro are people in the United States. So they want to be sold to, right? So they're the demand. They are the buyers. Now let's go a little bit deeper. If they're the buyers, what are they buying with? The dollar. That's where the exchange rate comes in at. That's where the price scale comes in at. We're not trading anything against each other. We're trying to understand how much people in the United States are going to be doing business with the people who live in Euro. That's what we're doing in the forex market, right? So let's break this down a little bit more. This is now you. This is where you participate, okay? So we're looking for a discount in price. We're looking to see if the United States wants to buy at a discounted price. Supply and demand, once again, because we as humans love discounts. We love a sale. So price goes all the way up here. Let me get my price note tool out. Price goes up and makes a new high. Now look at the difference between these numbers. You have 1.06178 at the last lower high. And this is just rounded because, I could pull it down to the top of the wick, right? So price goes down to 1.06162, right? We're going to put this on the wick. And then price goes up to 1.06405. So this is about less than a 30 pip increase. And let's get almost the exact range. This is about a 24 pip increase. And when I teach my students how to trade, it's like, listen, trade what you just spoke. What did you just say? Increase. Oh, buyers. Cool. Got it. So I want to be the buyer, right? But when it comes to supply and demand, we're asking, okay, but what price are we buying above? Now, this is subjective because you may be the type of trader and your strategy says you buy above higher highs. Like you're the person who connects the last lower high and you want that lower high to become your support. So you're going to buy off of that. Cool. I don't do that. I don't teach that. That's just me personally, right? But I do know Euro USD loves that type of system. But for me, when it comes to supply and demand, I want deeper discounts. I want deeper pullbacks, right? So I want price to actually pass 1.06. I want it to come down towards the lows, but I don't even want it to pass the lows, right? So the last lower low is at 1.04483. Now that's the price that we want price to stay above. We want the discount above that price. But the question is, how will we know when the market is going to stop and then go back the opposite way? This is when whatever structure you use is going to come into play. I use my zones, right? And I only use one zone at a time. I don't put zones all over my chart. I like to see price flow. And that's going to be the most important thing in trading. You want price to flow. You don't want to put any obstacles or any barriers in front of price. So I'm gonna go up one time frame. I'm gonna go to the 7-day time frame. Now the candlestick that sticks out the most to me, especially after we got that reversal on the daily time frame, is going to be the difference between the time frame where that lower low was made and then where my higher high was made, right? So the candlestick I'm going to be looking at is this bullish candlestick here, because once again, that's exactly where this low is. And now you can do your zone any type of way. It's honestly up to you. Some people do it by the wicks, the top of the wick, the bottom of the wick, the whole candlestick, a candlestick body. It's honestly up to you. I do my specific ways. I teach my students how to do their specific ways, okay? But we focus on one candlestick. It's honestly not about the zone. It's literally about the exchange rate. Because even if price comes back into the exchange rate, we still need it to stay above 1.04483. And I get asked that question a lot, like, Shaquan, what if price passes your zone? And my answer is, so? If price passes the zone, what are we trading for, the exchange rate or the zone? We're trading based on the exchange rate, because more than likely we're going to put our stop loss around that number, not the zone. The zone is an entry highlighter. The zone is where I want to take a trade from, but it doesn't dictate whether I don't get into a trade or not. It's the exchange rate that dictates that, okay? So with that being said, when price pulled back, right, we can see that it's coming back from this high here. What's the one candlestick that told us that was going to happen? It was the bearish engulfing candlestick. Now let me pause here, because this Sunday I'm actually hosting a live masterclass. I'm going to be teaching you myself how to read these price action candlesticks, so you're not looking at every single candlestick that prints, but you're looking at the most important candlesticks, from where you know price will make a high, you know price will make a low, and you know exactly where your entry is going to be. So if that's a class that you really need, make sure you sign up for that class, because seats are selling. Today's price is not going to be tomorrow's price, because each price increases by $10 until the day of the class. So this Sunday, November 12th, 2023, from 12 to 1, I will be on Zoom and I will be teaching you the beginning of my TMP process. You need to be in that room, okay? So let's continue. So what candlestick told us that price was getting ready to move back up? If you look at it, if you really look at it, it's going to be the first candlestick that you can name. And that's the name of the game right there, right? The candlestick that you name that says, hey, this candlestick I can recognize. I understand what this candlestick is telling me. I understand it's a shifter. It's a game changer. I'm going to enter. So for most of you, it's going to be this bullish candlestick, right? That's the candlestick that tells you that price is going to go higher. And if you did enter into that trade and you held it for some time, what ends up happening? Price ends up increasing and going back up. That is the one candlestick entry. Now I'm going to show you this again because I love follow alongs. So follow along with me this process, okay? As we can see, price ended up coming back up, making a very new higher high. Now, the moment you get a new higher high, you need to go and update your chart to say, hey, well, here's my recent higher low or my new higher low, which will be the bottom of this inverted hammer's wick. Now, if you follow me on TradingView, y'all may see these orange triangles. And what this means is that on TradingView, I've actually put an update on the price chart to where I think price is going to go, what I think is going to happen in the market, or I'm giving some type of tip, right, with how to trade the market. And so if you follow me on TradingView, or if you want to follow me on TradingView, be sure to follow me there because I also go live on TradingView as well. Now, you can see here that price made a new high. This is when I was explaining, you know what, I think if we get a pullback and price can stay above the higher low here around 1.049s, I do believe price is going to increase and it's going to go back up, right? Especially because price on the dollar had recently just made a new lower low. Now, how do we know, or how would you know that price is going to move down and then go back up? Literally one candlestick. The candlestick that gave it away was the bearish engulfing candlestick that price was going to be able to pull back. You didn't need a lower time frame to tell you that. You didn't need a reversal. The daily time frame is literally your bridge between the higher time frames and the lower time frames. It literally keeps you connected what is happening day by day in the market if you want to avoid noise. So please start using the daily time frame to make your analysis a lot simpler and easier. Now, with that being said, we see that price pulls back. But how do we know that price wants to stop and increase is the question. So once again, you can get your zone or whatever type of structure that you want to use. But here's a tip. If you are the buyer, your structure or whatever you use to say you want to enter a trade needs to be above a higher low. So whatever I use, whatever I decide to trade, I want it to be above 1.04962 in this example. And the candlestick I'm using is still the same candlestick. It's this inverted hammer. Telling y'all, one candlestick tells you everything you need to know. You don't need to go and look left for support and resistance. You don't need to be putting zones everywhere on the chart. If you use one candlestick for your entry, you will be fine. It gives you everything you need to know. And if you follow me on Instagram, I went live the past 2 days, November 6th and November 7th. And in both days, I made this statement. You're going to make trading as hard as you want it to be or as easy as you want it to be. And if you want it to be easy, eliminate the things that's making it hard. And that's what I teach. That's what I had to learn how to do. So now the only thing you need to manage is yourself. Now we can see that price came back to, let's just say, I'm going to say if you just zoned this whole thing out, right? It came back to the price range of 1.05566. Now, here's the thing. Once price gets to an important area where you want to enter the trade, you have to commit to entering. And that depends on whatever time frame you want to enter on. Now, this is a daily time frame, but let's just say I decided to drop down and enter in on a 12-hour time frame. I'm still looking for one candlestick to tell me, hey, I'm ready to get into the trade. And look what happens. When I drop down to want to enter into the trade, if I wanted to enter, you know what candlestick gives it away? This bullish hammer. Once again, one candlestick is all you're looking for. You don't have to drop down to multiple time frames. If you literally just drop down one time frame based on where your structure is, you can get an earlier entry or the best entry if you don't want to stay on that one time frame. That is multiple time frame analysis. I'm literally giving y'all gems here. Take the gems, okay? So that's the entry. And as you recognize, I recognize how I'm not putting a barricade in front of price to say, well, price has to stop here if it goes back up. No, you want price to continue to flow free so that when price makes a new high, you are already ahead of the game. You can let price flow like water, baby. That's all you got to do, okay? And so guess what? What ends up happening is price does go sideways for a bit, but eventually she does end up going up, making a new higher high. Once you start to change the way that you look at the market, once you start to change the way that you want to trade the market, once you decide to make trading easier and you keep the same flow in the same process, trading your strategy will become easier. But now the only thing, once again, you got to work on is how to manage yourself. So this is the one candlestick entry strategy. This is the beginning of my TMP strategy. But if you want to come in and say, Shaquan, the way you're looking at these candlesticks is unique. I like the way you're doing it and I understand. I want to see how you know price is going to go up to this high, go up to this low. What is changing the flow of price? And how do you know that's the best candlestick to enter on? Then be in my class on Sunday. I am teaching it live. We're going to back test it and we're going to do some analysis based around it to help prepare you for your week. Okay. So link is in the description box. I'll see you guys on the inside. Be blessed.